Well, hi, class, and welcome to Chapter 7. Chapter 7, we're going to get into technical analysis, which means we're trying to figure out how to read some of the squiggly lines, so to speak, that are on your computer screen. When you're actually into, let's say, Yahoo Finance, or you're looking onto maybe Morningstar, or you're looking into let's say, a website that shows all those great little graphs and all the charts and pie charts, and you're like, what is all of that? How do you make sense of it? Well, I'm going to try to just break down the most simplest form of, let's say, the technical analysis based on looking at some of the charts. So let's get into technical analysis. Technical analysis is the attempt to forecast stock prices on the basis of market-driven data. What you've seen happen in the past, what you think is happening currently, and then what you possibly will see in the future is what technical analysis is all about. And the technician, also known as quantitative analysts or chartists, those are the ones that usually look at price, volume, and the psychological indicators over time. Psychological indicators could be behavioral financing, which means people who act on a whim when they invest or when they inflate, let's say, the price because of their aspiration to buy more stock. But in essence, the stock really is not valued at the price that they're indicating. So those are some of the things that you're going to be seeing. Then the technicians are trying to map that all out for you on the little cool squiggly lines that you'll see. They're also looking for trends and patterns in the data that indicates future price movement. So not just simply looking in the past, they're going to continue mapping what has happened consistently from past, present, and then of course for your future. So the potential reward is looking at the trends. So most of the folks that are the chartists, the folks that actually chart out the data that comes out of the system, which is out of the financial database, which is publicly traded companies, what they've done, what they are going to be doing, is what this line will indicate. This could be any company, and at a glance, I would think you would see. First of all, I like the color green. Green means money. Also, green in this case is an upward trend. So the key word we're going to use in this particular chapter is trends. What are the trends showing us? So you're going to see the trends have highs and they have lows. And if you see some of the high moments in the stock you've invested, and you see this particular bar, and it's a high trend, that's where you might want to enter into the investment world of this particular stock. Then you continue following that trend as you go on and you go up and down, and you notice, whoa, in this case, the trend is downward. There is a hard, abrupt downward spiral. So now you're thinking, I may want to exit. In other words, pull your money out of this particular stock. A lot of this information is available to you online. Go to YouTube and you can get more of an expansive, let's say, explanation as to what the highs and the lows are all about. Now we're still talking about the trends. So you have trends that actually show you what the progress is of your particular stock. You also have supportive and resistant. Those are lines that are drawn by the trends that show you're either in support of the stock it's showing, or that trend is showing there's some resistance. Then you're also going to see some of the trends are giving you price patterns, what they're anticipating the price to be. And then your technical indicators. This is when you get into a lot of those formulas and, let's say, data crunching, and that's what folks do behind the scenes for you. So let's talk about the trends. Here is an upward trend on your left, which is something you want to see for your stocks. And I like the fact that you see a color scheme. There's no way you will confuse it if it's red. You know that is a downward trend. Now, we don't care for a downward trend too much. But then you also have the sideways trend. Sideways means there's no consistent up, there's no consistent down, it's staying the same. Sometimes that's good. It's based on your perspectives as to what you think you really want to do with your stock. I would rather see the first one. I want to see upward trend for my stocks. Now, a lot of people, when they are charting some of the actual trends, they give the lines to indicate where the parameters are. How high is this stock going, or how low is this stock going based on this? Again, green indicates the stock is moving upward. The red for you is a red flag saying, wait, this stock is consistently moving downward. Okay? We have a W and we have an M. The good indicators is a W. When you see the M, you're a little bit worried. Those are considered support and resistance. Those are the lines that are drawn in between the actual trend bar. So if the stock breaks through the resistance, which is the upward, then that's a good thing. That's when you want to actually maybe buy the stock. So you can see consistently that it is staying within the actual parameters of the standard price. Now it's broke through the actual resistance area. Resistance just means it's a metaphorical dotted line, which is where you normally don't see the stock plunge upward, but it's resisting and going through that resistance line, that imaginary line. That's when you might want to buy the stock. And then the reverse, when the stock breaks through the other resistance, invisible little dotted line that you identified, you might want to exit the stock. That is a clear indication by looking at all that red and the downward spiral. You want to get out of that particular stock. It could be IBM, it could be Apple, it could be Facebook. Either way, that is a clear indication that this particular squiggly, as we say on the computer screen, is going to be your red flag to get out of that stock. Price patterns. We use those trend lines to actually create price patterns, which means what's the price going to do? And there's different shapes of price patterns. You can see the one that we love, which is the one on the left, which is the green upward, which is basically a triangle shape. Then you have the one on the right, which is the red, which we call that a flag of some sort. And the one on the bottom left, that one's we consider a little bit consistent, a mountainous look. And then on the far right, that's what you see where you don't have a lot of change, but you have consistency. And that's where your pricing shapes and the patterns are occurring. And again, you have the invisible lines, which are your resistance line. Then you get into the folks who really want to see some of the data done in a formula. They want to see pi to the q to the x to the z. These are the folks that really want to see the technical indicators behind the scenes. And when they do that, you get these very, very creative but confusing charts. So if you are savvy enough to dissect what these are, each one of these are companies, and each company is showing their patterns. The green on the left, there on the bottom, I should say. That diagram shows that they've had a great trend for a while. Then they ended up going into a downward spiral, which is the red indication, and then over time, they came back up remarkably well, hopefully. All right, so that gives you kind of an idea of how the technical data is going to help the people who really want to see the numbers in a chart form. Some of the formulas that are created behind the scenes so you can understand over a period of 12 months, 26 weeks, and so forth, this is what your data from your company is going to reveal. And then from there, they will actually produce you with a moving average. So they have the opportunity to say, we've got the data, we've got it in one particular area. Now let's look at a 10-day moving average. So you can see the price line, which is the stock of the price, which is in the black line, then the moving average. The moving average, you want to get very, very close, hopefully, to the stock price and hopefully go beyond it. So that's what people are looking at for a 10-day moving average. What are they going to see in their particular stock? Then you know your indicator, because you already have the data, you want to see over 40 days what your stock's going to do. And you can tell when the stock crosses that stock price, the moving average actually connect, create a little bit of an axis. That's where you're going to either want to buy, stay, hold, or get out of it based on how the numbers come. And the most common that most investors like to see is a 50-day moving average. They want to give it time. They want to give it time to make some kind of movement and some kind of motion, and they want to get the stock market a chance to deal with the behavioral, the psychological, the political, all the other factors that come into play that create this data. And you can see over time, this particular moving average stayed a little bit closer to the actual stock price over a 50-day span. That also is a clear indicator is when you might want to enter the market. So you got a 50-day moving average, and you can see on the bottom left of the screen there that that might be a good time to enter the actual market for this particular company, because you can see that the stock price and the moving average crossed paths. And then you're seeing now, as you go along, that the moving average is moving further away from the actual stock price. That's where you might want to exit from this particular, let's say, security or the vehicle that you've used to actually secure this stock. That's it in a nutshell, folks. Simplicity is what I believe in. That's exactly how you're going to look at some of the squigglies on the actual websites that you're encountering. More detailed information is available to you, but this is what I want to give you a snapshot. Take a peek at the rest of the PowerPoints online, as well as the chapter in chapter 7, I should say, in our textbook, and look at some of the videos. With that said, guys, we'll see you in chapter 8. That was just chapter 7.